What's going on, traders? This is Mike with Tactical Traders. Been getting a ton of messages lately about how to identify different candlesticks, how to use them. It seems like there's a lot of confusion with candlesticks, and I can totally understand why. There's a ton of different candlesticks, a ton of different theories on how to use them, and it can be definitely overwhelming. So to kind of cut through a lot of the nonsense and a lot of the extra stuff, I just want to get to the nitty-gritty, the heart of it all. And I'm not saying that other stuff, the other details are not useful, but if you are just starting off and you just want to get a basic understanding to start, start getting the track greased, I'm just going to lay it down. And this is going to be the most common things that the trading community uses, as well as myself. So this is going to be basically helping you see what the majority of the trading community sees. And that is really a perfect way just to get started. If you try to examine all the different candlesticks and all the different theories, you can be going on for years and years. And you can kind of just get more of burnt out. So I just want to get right into the focus of it. And also, this course is just going to be, spoke off the cuff. I don't have any of this recorded, written down, anything like that. Just going to be explaining it very casual. I do not want this to be basically a classroom where it's just very stringent and mind-dulling. So I just want to kind of just talk to you like I would anyone else. So if you hear me stumble over my words or get mixed up, I meant to do that. But anyways, traders, so let's get right into it, how candlesticks are identified and how to use them. All right, so what is a candlestick? A candlestick is a type of price chart used in technical analysis that displays the high, low, open, and closing prices of a security for a specific period. These specific periods can range from 1-minute candles all the way up through weekly candles. So just to kind of make that a little bit more simplified, if that didn't make sense, each one of these candles here can represent a time, meaning 1 minute, 2 minute, 3 minute, 4, 5, 6, 10 minute, 15 minute, 30 minute, hour, daily chart, or a weekly chart. So that time frame is just represented within this. So if this was a 1 minute candle, this candle, the entire thing, is equal to 1 minute time frame, meaning 1 minute of price action. If this was a daily, same thing. Nothing else changes other than the amount of time this represents. Also, the high of this and the low of this, right, these candles, either one, is the range of price. So within this time frame, say this is a 1 day candlestick, there's prices on the side over here. Say it's $1 at the bottom, $2 at the top. Within 1 day, that price moved from $1 to $2 or $2 to $1. All right. So basically, this can be any time frame. It just represents whatever time frame is selected on your chart and the range of price action within that amount of time. All right. And there's also bullish candlesticks and bearish candlesticks. The main difference between obviously bullish candlesticks is more leaning to an increase of price volume, and bearish candlesticks are more indicating of a downward trend, a fall in price action. Now we're going to get into how these different candlesticks are laid out. So like I said, we have the bullish, the bearish, and then we also have dojis, also known as indecision candles. And I'm going to be referred to these dojis as indecision candles, indecision as doji, just so I make sure that there's no confusion in that. And going back to the bullish and the bearish, both these candles look very similar. I'm sure you can agree. Obviously, other than the color, some of them ones on the layout of them. And each one of these is a great indicator of what the next candlestick to follow forming could possibly be. And we're going to go into each one of those individually. So a bullish candlestick, it simply means that the buyers of that time period are winning over the amount of sellers. It also means that the closing price is higher than the opening price. The body of the candlestick represents the opening and closing price of a certain stock. Notice the candlestick are not perfect, thus creating the lower and upper tail. The end tail shows the lowest price the stock went down for that specific period of time. On the other hand, the upper tail shows the highest price the stock went up during a specific time. Now to break that down a little bit more simply, when you have a bullish candle like this, the bottom of it is where the price started off. However, all those sellers push this candle to go up, 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 all the way to here, within that time frame and then closed. So it would say this is a 1 minute time frame and it started at $1 on the bottom. Within 1 minute, buyers pushed this entire price all the way up to the top of here to $2. And that was 1 minute. Also, this is a nice solid body, meaning a lot of shares were traded within this amount of time. And that's the same case with any of these candles here. Bullish candles, the price will start at the bottom of the candle, push up to the top, and that is where the price for that time frame, that candlestick closed. So again, $1 up here, buyers brought it all the way up to the $2 mark on the top, and then closed out. Same here, here, and here. Now the main difference between this candle and this candle is the amount of shares that were traded in the time frame, in the price action. Meaning in this right here, a lot of shares were traded right here. There was majority right here, all the shares were traded. Now in this candle, the majority of the shares in this time frame were traded within here, in the body of it. However, there was some shares traded down here, just not nearly as many as the main body up in the top. As with this one, the main shares have been traded in here. Some shares did get traded down here at this price, and some shares did get traded up at this price, but the majority traded in between right here. As for this one, a lot of shares were traded. A lot of the price were down through here. Few shares were traded, same on above, but a lot of the shares were traded right in this body, and same with this one. Most of the shares in this body, and a few up here in this tall wick. Okay. Now moving on to different types of bullish candlesticks. So this is actually one of my personal favorites, and actually everything I'm going to be showing you are my favorite things to use, are my most commonly used tools. And this one is a hammerstick. I love hammersticks. Anyways, a hammerstick is a type of bullish reversal candlestick made up of just one candle found in price charts of different stocks. The candle looks like a hammer. That's why it gets the name, as it has a long lower wick and a short body at the top of the candlestick with little or no upper wick. So for this example, as you can see, the price was in a downward movement. However, this candle formed, and when this candle is forming, say this is a 5-minute candle, and we're looking, and these candles have not formed yet, and this candle has formed, it shows me that the sellers got the price down to this level. However, buyers saw this price, thought it was a good deal, and bought into it. All that buying caused the majority of the shares to get pushed up, and then a lot more people saw that happening, saw the price getting pushed up, and then decided to join because they also thought it was a reversal. That's why the majority of the shares were traded in this upper body on top. Even though there was some shares traded here, the majority was traded at the top. As this candle formed, other traders saw this as a sign and have also bought in, followed by some solid bullish candles, now potentially causing a reversal in the price action. Next, we have bullish engulfing candles, and it's pretty much exactly how it sounds. The bullish engulfing candle appears at the bottom of a downtrend and indicates a surge in buying pressure. The bullish engulfing pattern often triggers a reversal in trend as more buyers enter the market to drive the price up further. The pattern involves two candles, with the second candle completely engulfing the body of the previous red candle. So what I mean when I say that, let's say the price is decreasing as right here, and you have this candle form. However, on the next candle, a surge of buyers come in and push the price from the low up here all the way up. There were so many buyers that the majority of the shares were bought through this entire range, the entire previous range of the past, engulfing all these sellers right here and completely overshadowing this right here. It is a great sign to see, especially when there's volume with it. That is a great indicator that buyers have finally stepped up, saw that this was a good price, a good time to enter, and bought in, and many did buy in, causing a nice solid body, and hopefully, if you're a bull, encouraging a bullish reversal in price history, followed by another bullish candle, and then onward and upward. Now let's go into some bearish candles. A bearish candle is exactly the opposite of a bullish candle. In this kind of candle, the sellers are winning over the buyers. It means that the closing price of a stock is lower than its opening price. So again, what that means is basically the opposite as when we went over to the bullish candlesticks. Meaning that on this candle right here, this is where this candle started. So if this is a 5 minutes, the beginning of this 5 minutes started right here at this price. And we're going to say this is one down here and two at the top. So the price started at $2. The first 5 minute candlestick. Beginning of that 5 minutes, the price started at $2. However, so many sellers were there at that point, it pushed the price all the way down to $1. There were so many sellers that it was a solid body, and a large amount of shares were traded all the way down through this. As with this one, the price opened up here at the top of the candle, at the $2 mark, and pushed all the way down to the $1 mark. And then sellers did push this down, and then as more sellers saw the price dropping, more ended up selling at the low over here, possibly starting to panic right down here. As with this one, similar to the first candle, price started up at the top, pushed all the way down. There is some wick here and wick here, meaning a little bit of shares were traded right here and a little bit of shares were traded right here, but the majority of the sellers did sell in here. As for this one, started at the top down to the $1, and as for this one, starting at the $2 and moving to the 1. So it is very similar to the bullish candles. And I just want to go over this one more time because I don't want there to be too much confusion. So with a bullish candle, the price starts at the bottom. So this 5 minute candle, the price started here at the $1 at the bottom. Buyers brought it up, so at the end of the 5 minute candle, price ended up and closed it up here at the 2 minute. And that is the reverse for these bearish candles. The price here started at $2 but got pushed all the way down within the 5 minutes to the $1 and closed there. So a bearish candle is the exact opposite of a bullish. Makes sense. Now let's get into the different types of bearish candles. Like I said, there's many more to this, but I am giving you the entry level, the basics to get started. All right. So we're looking at the bearish engulfing candle, exact opposite of the bullish engulfing candle. The bearish engulfing candle formation on the chart could be found during bullish trends. The pattern starts with a bullish candle. This candle then gets fully contained by the body of the next candle, which is bearish. It's engulfing it. This pattern creates strong potential for price reversal on the chart. In this manner, the current bullish trend might turn into a bearish movement on the chart. So to sum that up, price is increasing, and then a bullish candle forms. The next candle completely engulfs, overshadows the bullish candle, and it is bearish. So the price got all the way up here, and then bears came in, sellers came in, pushed it all the way down below the low of the previous candle, fully engulfing it. That is a great indicator, especially with volume at the same time, if this happens, that the price can now be seen as a potential bearish reversal, meaning price will start to come down, a reversal of the trend. And as that comes down, hopefully you see another bearish candle after that bearish engulfing, and that kind of confirms it's starting to go down. And on to the next one. Now we have an inverted hammer. And again, the inverted hammer is just like the bullish hammer. It's just reversed or opposite. The inverted hammer has a small lower body and has a longer upper wick. When it forms in an uptrend, it's commonly referred to as a shooting star, and this can be a sign of a bearish reversal. This is actually one of my favorite candles to watch for. When price movement is in a bullish trend but is starting to get overextended, and it is potentially showing me that the price is getting a little bit weak, it needs to either reverse or pull back. And I'll get more into that in the chat room, but this is just a basic little rundown. As you can see here, the price has been going, and then it made a nice move up. But I guess some buyers here started to not get so confident. Selling occurred. Some of the shares started going down this thin wick right here. As other people started seeing the price go down, they rushed in, creating a big body here where there's more shares sold than up here because they are starting to see the price come down and they want to exit, take profits, or short within that area. And then the following candles are bearish, kind of confirming that the reversal has started. Now we're going to be moving on to different types of candlesticks. They're not going to be bullish or bearish. So dojis, aka indecision candles. Sometimes neither the buyers or the sellers are really winning. The market in the whole is kind of undecided, and when this happens, a doji candle is formed. And when it forms, this is kind of an indicator that the overall amount of traders or investors are unsure on what to do and are unsure if they're willing to pay a higher price or are willing to sell at a lower price or higher price and so forth. So this is actually a great, these are great candles to keep an eye out for. They can vary a little bit, showing some color to them. There can be somewhat of a body. It's really, there is some leeway in this, but they're great candles to look at because it can show a potential reversal. And like I said, the dojis, they reflect a lot of uncertainty in the specific price. And overall, you just want to make sure you see this because, as you can see here, the price is going sideways, and then all of a sudden, this doji happens here, and the price is now starting to increase. Now, just one thing to point out, especially with this example, I just want to do this just in case there's any confusion. Yes, there is multiple dojis forming all throughout here. So I totally understand that. This is nothing confirmed. These are just things to watch for. These are potential foreshadowing of potential movement. So these are not really something I would say are certain, strong movements. They're very unstrong movements. They're very uncertain moments. So they're always just something good to keep an eye on. All right. So this is just like I said, an entry-level introduction into candlesticks and to get some basic understanding. This was meant to be a very quick run-through, explanation. I don't want to get too much into the nitty-gritty, but if you are interested in getting a little bit more depth and how to use these candlesticks in certain patterns to also line them up with different indicators, definitely come check out our chat room and our website. We have a live 24/7 live chat room, and we have a few different traders that are very experienced. Our senior traders, our top traders, will go through and try to kind of help you break down one-on-one if you're having problems, understanding it. And we are also offering some more in-depth classes if you'd like it more of a styled walkthrough. But if you do need someone to just jump in one-on-one with you, especially in a live chart, definitely check out our live 24/7 chat room. We are offering a free 30-day trial. Check that out through our website and also in the details below in this video. I hope you found this video helpful. I hope it kind of got you an idea of how candlesticks work and we're laying the foundation. If you like the video, please hit that like button. It helps me out a ton. Subscribe to the channel if you want to see more videos like this or see more hot stocks coming up. And check us out on Facebook, Instagram, and StockTwits. All right. Thank you very much for traders for watching. And until next time, stay profitable.